Hello guys, welcome to PlaybookFX. In this video, we'll be discussing breaker block. Understanding breaker block helps trader anticipate market movement and make informed decisions based on previous price action. Before we proceed, please like this video, leave your comment in the comment section, subscribe to this channel, and turn on notification bell so as to when I release a new video, you'll be the first to be notified. Without further ado, let's get right into the video. Breaker block refers to a specific price area or zone on the chart that indicates a significant shift in market structure where price break through a previously established level of supply or demand. When price break through a key level, it creates a breaker block, which can often serve as a potential reversal point or an area where price might react in the future. So traders look for these blocks to identify potential entry or exit points as they may signify buying or selling interest. Let's say price is pushing to the upside. Price was pushing to the upside like this. Now in this scenario, price is in an uptrend because price is creating low, higher highs, higher lows, higher high, higher low. Then price printed a high here. When price comes back to this zone, we are expecting price to respect this zone and continue pushing to the upside here. But instead of price respecting here, price violated this zone aggressively without leaving any reaction here. So this zone here that price was supposed to respect now becomes a breaker block. Let me go again. When price was pushing to the upside, price was printing lower high, higher high, lower high, higher high, lower high, higher high. Price was supposed to create a new low to continue pushing to the upside, but instead price pushed aggressively to the downside. This demand that price violated becomes the breaker block, and we'll be expecting price to come, mitigate this breaker block and continue pushing to the downside. Now in a bearish scenario, let's say we are having something like this. Price is creating lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Price get to next thing. Instead of respecting this level, price push aggressively and violated this zone. Now this supply zone that price was supposed to respect but violated it now becomes a breaker block. So we'll be expecting price to retrace to this breaker block and continue pushing to the upside. Again, price was printing downtrend, giving us lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Price was supposed to print a new high here and continue pushing to the downside to break this swing structure. But instead, price violated this area aggressively and continue pushing to the upside. So this zone, this supply becomes the breaker block. I'll be expecting price to retest that breaker block and continue pushing to the upside. The logic behind this breaker block is that now let's say you have a higher time frame point of interest and price is buying towards that level. When price mitigate this level, the selling pressure on this POI push price aggressively to the downside and price violated this demand. The selling pressure inside this POI was the reason why price pushed aggressively without reacting to this demand level. So this becomes the breaker block. The same thing applies to when price is trending to the downside again. Probably price mitigates a valid demand on higher time frame and the buying pressure inside this POI push price aggressively and it makes price to violate this supply aggressively without even reacting at all. This supply now turns to demand. I will be expecting price to come back to reclaim it and continue pushing to the upside. I'm going to show you examples on the chart. Before I show you examples on the chart, I would like to point out what you will need to look out for before selecting a valid breaker block. The first thing is your breaker block has to be a reaction on higher time frame POI. It has to align with a fair value gap and inducement need to be present. These three things are what you need to look out for before selecting a valid breaker block. So let's go to the chart so I will show you some examples. So on GBP/USD on 4 hour, as you can see, price was bearish. We have a sweep of liquidity here and price broke structure to the downside. After price broke structure to the downside, price retraced back up, swept this liquidity again, mitigate this POI here. After price tapped into this POI, price sold aggressively. This demand that was supposed to be respected, price sold aggressively, violating this demand. So when price validated this demand, we have a breaker block. But to validate this breaker block, I said one, it has to be coming from an higher time frame point of interest. And the second thing, we need it to align with a fair value gap. The gap between this candle wick and this candle wick is the fair value gap. Let me show you another example now. In a bullish scenario, the gap between the wick of this candle and the wick of this candle, the gap between them is the fair value gap. Inside here, there is no gap. Price push up here. You see, price was filling all gaps here. Price was filling all gaps here. But when price go to this area, leaving little gap between this first and this third candle here. So that's the fair value gap. Price has validated this demand level, and it also aligns with fair value gap here. So the next thing we need is inducement. Do you have inducement here? Yes, we have an inducement. This incomplete pullback is our inducement, and we'll be waiting for price to come back to this breaker block to respect it. Now let's zoom out and see if price come back to that level. You see price came back to this level and respect it. This is a valid example of breaker block. So example 2 will be this one, the same DAP USD. Price came to this, see price mitigates this 4-hour POI. This I'll see it as an engineer liquidity. Why? Is because this I did not take out this low, so it become an internal liquidity. Price targeted it. This was an extreme POI on 4-hour, and you see when price got to that POI here, price reacted and sold aggressively to the downside, leaving us with this failed demand. This demand failed. The next thing we want to look out for is, does this demand that failed, does it align with the fair value gap? This is the fair value gap here. It does align with this fair value gap here. If you go to smaller time frame, you see that it even has an inducement. This is the breaker here, and this is the inducement. This is also a valid point of interest, and it has everything we are looking for. In reaction to higher time frame POI, this demand failed, and we have fair value gap in inducement. So those three things are present there. Let's check good. You can see it was bullish. Let's check for our, we have a break of structure here. Let's check one hour. We have another break of structure here. See, obviously this buying move has been overextended, and we'll be expecting a pullback here. So if we go to like 15 minutes, let's look for what happened there. Price gave us a valid breaker block here as well. So this is good all-time high. So gold is not reacting to any POI on higher time frame. But what do we need to see? We need this valid demand the price was supposed to respect. Let's see on 5 minutes. We should zoom in very well. Here you see that gold actually swept liquidity here and broke structure, which indicates that this is a valid protected low, and price has already mitigated this candle here. We'll be expecting price to trace back down, take this liquidity and mitigate this demand here. But you see, price validated that demand aggressively, giving us a breaker block. After price gave us a breaker block that aligns with fair value gap, price printed an inducement. And you see price came back, tapped into that level and started selling to the downside. This is another valid breaker block here. If you look at what happened here again, you see that price swept liquidity here, broke structure to the upside. Price was supposed to come to somewhere around here. Price reacted a little bit, then swept this liquidity here and then pushed aggressively. This was supposed to be a demand the price was supposed to respect. So price validated that demand after sweeping liquidity here and sold aggressively to the downside. The breaker block aligned with fair value gap, and we have this as our internal liquidity or inducement. Go to your chart, look for this kind of move on the chart. After price react to a point of interest, you want price to react like this aggressively to the downside. How many times price respect the zone, and how price respect the zone? Backtest, backtest and backtest. That will be it on today's episode. If you like this video and you would like to see more, please give this video a thumbs up, subscribe to the YouTube channel and turn on the notification bell so as when I release a new video, you'll be the first to be notified. Thank you and see you in my next video.